Today is the 8th of March and it is probably, I think, the 13th day of the war, and which is a sad event. However, the market is also reacting according to it as we predicted on last Friday. So let's just go back to the market and see how the market is reacting. Uh, so this is how. So clearly here we can see a very classic example of a shake up before a breakdown. So there would be people who would have kept their stop losses here and they would have bought into this market, right? Now we can see those stop losses have been hit and market is falling further. This was yesterday. The market gapped down from a very uh, crucial point, about 16,300 levels, 225 something, which was just above 200, and market gapped down to 15,850. So the crucial level of 16,000, which is a round figure, round number was broken, and market opened here. So if we go back and watch yesterday's market, so market did not do much and it just made good support and resistances, right? It just went down and it went up, it went down, it was following a range which we saw yesterday, and today that range has been broken some at around 1150. So if the market reacts as per how the how we see this range, it should at least fall further 1.3435%, which is really good, and we can see further. Uh, we can see target reaching up to 15,500 if the market reacts as per the charts. However, we have to place our stop losses accordingly, right? Um, since this was a resistance point, I have entered into the position some at around this point, 1020. This market has respected the resistance and it has fallen further. So now my stop loss should move ideally to this level, as this being a very crucial level. Here the market should have taken support but did not take a support, and further it fell down, retested, fell down, retested, and then further it has broken down, which has now, we can see the open has now been broken, and also yesterday's channel has been broken. 2 days channel has been broken today. Uh, we do not know how the market reacts, so for that we will move our stop losses to this point. If the price comes back to the channel, that means there can be further sideways movement. So I will not wait for it to, I will not hold on to the trade, but I will exit the trade when it goes back to the channel, taking some small profit. And whenever it breaks this channel, either on the upper side or on the lower side, we can think of a trade. Anyways, the gap down which has been done here is a runaway gap down, and this clearly confirms us of a bearish market. Already we have seen a very big gap down here, right? And then there was a runaway gap down. So this confirms that this is a bearish market, and this could be the third wave. So we have to enjoy the third wave. So that is the reason why we should be. This can be the third wave. We will only get to know later on, as per the Elliott wave theory. We will only get to know later on. But we should always be careful and preserve our and learn how to preserve our capital. That is all. So keep a track on the market. Here we can see a retest happening. So just keep a track on the market. Do not just go and enter based on your assumptions, but see if there is a pattern happening, and then only we should enter. If there is a rejection happening somewhat here in this channel, this area, which is below 17,050, 15,750, if there is rejection happening here, if the market goes sideways and there is a rejection happening here, you can take a trade here. So that is all. Thank you so much. As we are seeing that the market has further gone into sideways, and this was the open as we discussed today morning. The open was broken, and then the market was continuously moving sideways, but then uh, today's second session, this has been broken. This limit was broken and it came up, hence hitting my trailing stop loss. I have exited the trade. Now, if the market goes above this or below this, only then there is a trade opportunity. I'll, I'll show you the channel. This is the present channel that we can see. Only if market goes below this line and above this line, there is a possibility of entering a trade. The market has again further entered into a sideways situation. This tells us that this is the second day of sideways market. We will wait for, I can say that the sideways market generally continues for 4 days to 5 days. We do not know how long it can be into the sideways, but generally it's about 3, 4, 5 days it stays into the sideways, and then there is a gap up or sorry, there is a breakout or breakdown. So we will wait for that uh, opportunity. uh, just wait and watch. Once this market, once this area is broken, retest happens, a support is being seen at this area, only then you should enter. Once this lower level is broken, retest, and there is a rejection happening, only then you should enter into the trade. Otherwise, stay away from the market. That's all. Thank you.